Tech stocks have had a very strong start to the year. Can that continue?
Well, full disclosure, I've been skeptical of these stocks for a long time, and I've been wrong. And I think there are a couple of reasons that I am concerned. The first is they've been driven higher by the move towards passive and index fund investing. The S&P is dominated by these large companies. As more money goes into the S&P and index funds, these funds buy these stocks for no fundamental reason. I do worry if there's a reversal in those flows, these stocks will be hit hard. The second thing I worry about is regulation. There's almost nothing the Republicans and Democrats agree on. The one thing they do agree on is that big tech companies have too much power. I think there's a real risk of regulatory pressure.
Yeah, we're going to dig into that a little bit more, I'm sure. Walter, if you look at what's been the best performer in the Dow so far to start this week, it's been Apple. How much of that is related to the U.S.-China trade truce?
I think a lot of it has to do with that. Obviously, that's been a huge concern for them, given the amount of phones that are made in China, and the number of products that are sold in the U.S. that could be impacted by any type of incremental tariffs from those types of products. So that's been a big positive. But look, the other issue here for Apple is, are they making some progress on services? Is this upgrade rate that's been really providing a stiff headwind to the company for several years now about to abate? They don't have a 5G product. That could be an issue in terms of helping them stimulate that upgrade rate and return to growth. But again, this is the lowest the upgrade rate. People are holding onto their phones longer than they ever have before, so there might be an opportunity for some of that to inflect later this year.
Walter, is there a fundamental issue over at Apple? That Wall Street Journal report earlier this week saying that Johnny Ive's departure cements triumph of operations over design and sort of questioning the innovation going forward. Is that a concern?
I mean, look, the numbers speak for themselves, and we've talked about this for some time. Back in 2012, the company spent about $3 billion on R&D, and it was only 2.2% of revenue. Since that time, the R&D budget has quadrupled, and the revenue growth has only grown 60%. Obviously, that's good overall growth, but they're investing a lot more in what everyone's hopeful to be new products. And we keep saying, like, okay, if the iPhones can just grow a little bit, maybe they'll drop some new innovative product. But year after year, we haven't seen anything really that innovative. So you can't invest in Apple on the hope that this massive R&D budget that's quadrupled, since 2012 and now represents whatever 5-6% of revenue, up from 2% of revenue, is going to deliver a product. You have to invest on the basics. Is the iPhone replacement cycle going to stop lengthening? Are services going to resonate with their 900 million active iPhone users globally? And those are the reasons to invest. And if they deliver something innovative, great. That'll just be additional gravy for investors.
I mean, it is interesting to watch the stock at 2-month highs. We're almost at the highs of the year. It feels like, Walter, this is a classic case of, climbing the wall of worry. The skepticism is actually healthy. Johnny Ives, questions about innovation, question about the next big hit, questions about the China sales slowdown. How many analysts have taken down their numbers on China this year, and yet the stock is at new highs?
Yeah, it's amazing and this has happened before. Back in, I think, 2016, the last time the company had a decline in revenue, the following year grew at 5% and then 16%. So I think there is a core belief that, look, this is a product where the customer retention rate is super high, 99%. Customers aren't, when they upgrade their phones, they're not moving to Android or Samsung. They're staying with Apple. So there's a belief that with this strong user base that the company can leverage either more sales in the future or some type of services through that customer base. And I think ultimately that's what helps the stock gain investors, even when things look really bleak right now in terms of what's happening in China.
Charles, you can make some of the same arguments about some of the other big tech names. I mean, Facebook, for example, up 48% since the start of the year, despite all of these looming regulatory risks and, focus on privacy and how they handled misinformation, et cetera. Investors who weren't buying into these stocks have really missed out on quite a run here. Is there any reason to think that all of the regulatory headlines we're getting now is going to change that?
It would have to be actual action. It can't just be hearings. It can't just be Elizabeth Warren making angry statements. I happen to believe there is a real risk that the Trump administration will get tired of the power that some of these companies are exercising. Some of it is about predatory pricing. Some of these companies have been offering products at zero revenue and driving competitors out of business. That was the original rationale for example, the A&P antitrust regulations. And I do think the government can make it difficult for somebody like Facebook if they decide that they're exercising too much power. I think that's a real possibility, but I admit I predicted that last year, and so far it hasn't shown up in the numbers.